Well, welcome back again, ladies and gentlemen. To remind you, my name is Simon Cox, the Emerging Markets Editor for The Economist. I'm based in Hong Kong, and China broadly has become a leader in what we're going to discuss now, which is FinTech. It's really remarkable. If you visit mainland China and even go to a vegetable market, people will accept payment using QR codes. In fact, journalists like myself go seeking out the most unlikely use of QR codes. There have even been reports of beggars on the streets of some Chinese cities who will accept donations using FinTech apps through your phone. That makes the subject of the next session very close to my heart, which is the particular kinds of FinTech that work and succeed in emerging economies, and whether it may be emerging economies that push the field forward perhaps even faster than developed markets. I have a number of interesting guests joining me on the panel. I'd like to invite them to join me now, if you could. We have Mr. Samer Bosali. He is partner with the tantalizingly named Strategy And. Thank you, Samer. We also have Mr. Walid Hanna, who is Chief Executive Officer of Middle East Venture Partners. Please take a seat.
Probably here.
Oh, good point. See, despite all the FinTech, it still helps to be able to count. We also have Heather Henyon, who is founder of Wayne, the Women's Angel Investor Network, and Mr. Hisham Ez Arab, who is chairman of Commercial International Bank, Egypt. A round of applause, please, for our panel. Samir, if I could start with you. You've looked at FinTech both in developed markets and emerging markets. How would you tell the story of FinTech so far?
First of all, thank you for having us, and good afternoon, everyone. So I sit on these panels often to talk about digital disruption. And this is unique because disruption in the financial services space is different. So I want to start probably with a bit of history. 2007 was an exceptional year for financial services, or the FinTech conversation today, because of two things. First of all, there was the launch of the iPhone. Why does that matter? I'll tell you in a second. At the same time, there was a start of a 2-year meltdown of the financial services sector. So in the same year, we had two immense events happening at the same time. The iPhone changed everything for everything else, for car hailing, for booking in hotels, for dating even. In parallel, the financial sector went through a period of heavy regulations post the meltdown, and also heavy regulations for anti-money laundering issues. And that placed the banks and the whole sector in a place where it went conservative, to say the least. So where is FinTech in all of this? The FinTech story started early in 2005 as a way to transform the back end and move to transform UX. But now it's about transforming the entire banking experience, the entire set of verticals, like lending, payments, transfer, remittances, investment decisions, and so forth. And in the emerging markets, where actually it's the most successful today, it's about transforming the unbanked to be banked. So to give you an example, out of the 2 billion adults in the world that are not banked, you've got 21% of those in India alone. And we'll talk about this today. India and China are becoming benchmarks in the space of FinTech.
And Walid, if I could turn to you. FinTech is a very baggy term. It's a very broad term. Within that universe, are there particular verticals that you think are most promising?
Yeah, FinTech is very broad, as you said, because it goes from crowdfunding, regulatory technologies, blockchain, digital banking, payments, lending, all of that space. The most interesting investment opportunities we're finding in this part of the world are very different than what you'd see anywhere else in the world. Very few blockchain-based technologies, and that's fascinating. I'm reading a lot about it. You read a lot about initial coin offerings, but none of that is happening in our part of the world. So in this part of the world, it's mostly a couple of digital banks pure plays, purely online. We've seen several billing aggregators, a couple of lending clubs, peer-to-peer lending. Honestly, not much in quality. Now, in numbers, the numbers are a bit scary. We've counted 43 FinTech companies in 2013, up to 120 in 2015. And the number is supposed to double again and again due to those different accelerators that we're seeing in the DIFC and everywhere else in the UAE and this part of the world. Now, 80–90% of these will disappear, will go bankrupt. And fortunately enough, in our portfolio, we have 4 FinTech companies, and alhamdulillah, they're all doing well.
And Heather, if I could turn to you, I mean, you're in this world of angel investing where you have to tolerate quite high rates of failure. How do you minimize those risks? And again, what particular verticals strikes you as most promising, particularly in this region?
Yeah, well, you've got to have a big portfolio to minimize risk. So, for example, I have investments in 70 startups in Europe, US, and Middle East. 45% of my portfolio is actually based here in the region. 40% of my portfolio is women-led, and I see a higher performance of the women-led companies compared to the non-diverse teams. So I would definitely recommend finding female founders, investing in those. So you need a 1 out of 10 will succeed. A lot of them will fail. Some will do okay, but over a period of time. I actually think FinTech is a very promising area in the region. I've worked in microfinance for over 10 years, and it always drove me nuts that the kind of access to finance for the poor, for women, for youth was so underserved. I think there's a massive opportunity there, and we see groups like Liwa, who does peer-to-peer lending for SMEs, Money Fellows, who has an online Gameya product in Egypt, and lots of different crowdfunding platforms and KYC platforms as well that I think are really promising. There are lots of ways to disrupt. So I think FinTech, EdTech, health tech, I mean, to echo what Arif Naqvi described, those are kind of the defensible sectors, but we've just added in a tech piece. Maybe not housing, but those other 3 sectors I think are absolutely the future of the region.
And if I could turn to you, Hisham, I mean, many traditional incumbent banks, especially in developed markets, see FinTech as quite a big threat, frankly, a disruptive force. Do banks in the emerging world see it the same way?
Companies and the first banks to go live on Ripple using cross-border payments technology on the blockchain we're here in the emerging markets. Siam Bank out of Thailand, Axis Bank in India, Yes Bank in India, all on the forefront of technology and also the first to adopt our technology.
This is an amazing feat of ventriloquism on my part. I'm much more eloquent and articulate when I don't move my lips. I don't know if you've noticed that. Apologies.
Thank you.
Technology.
Well, the situation is different in emerging markets and especially in Africa because fintechs, they complement what banks are doing and they are not disrupting the financial service. And I can give you a lot of examples from fintech companies in Uganda or in Nigeria like QuickCheck. They are complementing really the financial inclusion rather than they are disrupting the financial service. And I can talk about Egypt, that fintechs or payment companies like Fawry and others, they are part of the collaboration model. So we look at it between the mobile operator, and between the fintech companies, and between banks and maybe other service providers like MasterCard. We complement each other. We are not competing. There is no one is disrupting the equilibrium there. And I'll tell you that like Numida, the company in Uganda, they do SME lending, small business lending. And they have been in the business for about a year. Excellent. Their repayment rates is like 99%. I'm not going to talk about the interest rate they charge on a weekly basis, but it's a very profitable business. Same thing with QuickCheck. In Nigeria, they lend between $15 to $100, and the repayment rates are outstanding. There is a gap in the market to cover the very small and microfinance. Either companies do it, but technology companies play an instrumental role in complementing the financial inclusion. And if I have time, I can give you an example about the CIB Smart Wallet and how the NGOs use the wallet. We have a model, Smart Wallet, you download in your mobile. It's a method of payment. It's a collaboration model between Fowry, CIB, and MasterCard, and so on. But now, the NGOs or the microfinance companies, they use this as disbursement and collection platform. Practically, the wallet became the way they disperse money to the lady or the gentleman who borrowed the money, and it's a way as well to collect the money. So you don't need to send your agent to collect the money. And it's cutting cost, making lending cheaper. And it's fintechs in Africa generally and Egypt specifically, they are not disrupting the equilibrium. In fact, they are complementing
a lot as well. Are you going to be around at the networking?
Is there anything we can do to stop the...
Well, I have some colleagues here as well. Maybe we can chat.
The ghost?
Are you based in Dubai?
Interesting as they are, I'm worried someone's going to say something terribly controversial soon. Keep listening.
Dubai.
That's very interesting. I mean, Samir, if I could come back to you. I mean, you mentioned this sort of interesting paradox in the developed world, that the introduction of heavy regulation after the financial crisis made banks very conservative, but that was actually a spur to innovation outside the banks.
Yeah.
What about the role of regulation in the emerging markets? I mean, the financial regulators in the emerging world are just as cautious, just as worried about crises as anywhere else. Why aren't they stepping in to snuff the life out of these interesting fintech experiments?
Absolutely. So just to go back to what was discussed now on the panel, there are two schools of thought here on where we think fintech stands vis-a-vis the sector.
Right.
Does it complement it? Does it threaten it? We can debate this at length because evidence has shown that it's either way. But PwC ran a survey last year of 1,300 global executives of the financial sector and asked them tons of questions. One question was, what do you think will be the impact of fintech on your business? And the view was, on average, they felt that in the next 3 to 5 years, a quarter of the revenues will be threatened by the growth of 24% to be exact. It's a survey.
Yep.
It's not based on exact science. It's based on emotions. But we're assuming that these CXOs are not very emotional. They have some data behind those statements. What does that mean? So fast forward 10, 15 years from now, do you see fintech as an extension of the core banking sector, or you see it as a capability that is actually disrupting the incumbents? I see the latter. At some point, I see a model where if you don't do much as a bank, you become a close to utility company, a commoditized version of a back end, and the real value-generating business will happen on top of what you're providing, just like telcos and the OTTs, like the Facebooks and the Googles, cartoonishly. So back to the question on regulations. So in areas where fintech has shown immense success, like in China and in India. So take China, for example, where the P2P market is the social transfer is close to a $3 trillion market, where you have 200 million users whose ATM accounts are linked to WeChat, for example, and Alipay. It's not like the regulations became looser. It's just that the new players have found ways to work with the current regulations, and the government has actually made dealing with regulations a bit more innovative. Same for India. India, for example, I know you spoke this morning about the JAM program, JAM Trinity, basically, where government said, look, we have 20% of the global unbanked population in India. So out of 2 billion unbanked people globally, 20% are in India. It's not okay. It's not a good thing. To move to a cashless economy that is clean, we want these people to be banked. So they've had a three-pronged approach to this, where the Prime Minister created a kind of a regulation for current accounts that was much easier to have linked to your mobile account and ID. Day one, they had 15 million users. year one, or not November 2015 till August, it was like, what, 300 million extra users. And if you look at the regulations, it's not like they were designed to let go of the sector. Quite the contrary, actually. But the decision was, let's make the FinTech platform a platform for banking people, because that's a good thing for the GDP as well.
Wally, do you have a perspective on how regulation in this part of the world is either promoting or holding back FinTech?
In this part of the world, it's extremely lousy, except for the UAE. We've read about it. We've heard a lot about it. I've seen what's happening in Abu Dhabi Global Market. They have a Reg Lab, ADGM. I'm not sure what's coming out of that, but I read about it. Abu Dhabi Commercial Bank has done the first international transfer based on blockchain, this distributed ledger for international remittances. So there's something happening there. We've seen Abu Dhabi Islamic Bank launch their first digital bank, but I'm not sure how this is regulated. Pretty sure they have a regular license. What's happening in Dubai beats everything else. We've visited the DIFC FinTech Hive, and they have about 10 to 15 startups, and they're matching the bank's needs in terms of R&D with what's available out there. So they're attracting international startups and kind of matching them as a market in the UAE using those bank licenses and the banks as customers. But the interesting thing is that the IFC allows you to test your product on the market for 6 to 12 months without the license.
Right.
I'm not sure how this works. I never tried it. I just read about it, but it's just fascinating. So we're doubling down on FinTech and doubling down on Dubai and the IFC. And by the way, we're moving our office to the IFC.
Really? Okay.
No.
Well, there was
just waiting for the license, hoping we're going to get it in the next couple of weeks.
We did have this announcement this morning of a financial accelerator for FinTech, and it included this idea of an innovation testing license.
That's it.
That gives you a little bit more leeway to, I guess, to fail. And actually, one of the secrets of China's innovation success sometimes is that they don't mind introducing beta versions to very large populations who don't seem to hold it against you if it doesn't work too well the first time. It's a useful consumer market to have. Heather, you mentioned that some of the women-founded firms that you've invested in do better. Why is that?
I don't know, to be honest. I think part of it is just commitment. So often women, when they commit to something, they take it all the way. They don't, even in hard times, I watch a lot of the women founders. I see some people laughing in the audience, but I think you know what I mean. So women really, they'll work 10 years to make the company successful, and the tenacity is a really critical element to success for entrepreneurs. Things are hard when you're starting a business, building it, running it. So I think a lot of it just comes down to commitment, the drive. There's also a whole discussion now about unicorns versus zebras. So the idea is that men start unicorns, and this is the hockey stick, exponential growth that we talk about with the 1000x exit in 3 years. For women, the zebra is the kind of straight line linear growth, maybe a 10x return, longer term time to build the business, but you actually get the money back. Zebras are real, unicorns are imaginary. So,
By the way, our first exit was a lady CEO. We've done a 6x in 2 years, 2 lady CEOs.
But that's quite quick. That's almost unicorn.
But on the other side of, we had only 10 or 15% of our portfolio companies. We have 43 companies we've invested in. About 5 or 6 are women founders. 2 of them got into fight between each other. It happens with men as well. So we have both sides of the story. So we have the bankrupt and the very successful ones.
Well, willingness to fight is one sign of tenacity, I think. Hisham, if I could turn again to you. You mentioned one particular success is this sort of micro-lending of about $15 to $50, and that repayment rates are pretty good. Have you seen any applications of FinTech to develop better credit rating for people who might not have traditional credit ratings? Any way of helping lenders to discriminate between good and bad credit risks?
Well, there are models about like credit scoring and so on, but what I want to say is 2 points. One point related to Heather and the female default rate in microfinance. It's the lowest. In fact, in Egypt, always you go to the microfinance companies, they say, always tell you that females are much more committed and default rates are extremely low, and it's a part of the scoring. It's not a discrimination, but really the history and the data is saying that females are much more committed. Now, let me tell you that part of the change is two things that we all have to realize. One, data is critical, and data analytics is critical for credit scoring. It's no longer who's paying, who's not paying. Okay, you can lend people with no credit history based on some payment history, historic payment history. We do that. We have developed models for smart credit just through your wallet activity, what you pay for and what you do. And this is the future. And the traditional credit history is changing. Two, we have to understand that the millennial generation doesn't want the traditional banks. And the threat here is not from the fintechs. It is from the habits of the millennial generation. Trust me, the mobile is their life. If they can get an app that can do their payments, buy theater tickets, download applications, and buy pizza as well, they would love to download this app. This is the winner for them. We don't understand that yet, or we know that's coming, but we don't want to believe it yet. The banking we know today will be very different from the banking of the future. And this message is not only for bankers, maybe have a few years left in banking, then thank you. But that message is for the regulators as well. And the over-regulation that we have seen in the world, I'm not talking about our part of the world, but really in Europe and the US, will get banks out of the equation, okay? And they will be replaced either by fintechs or peer-to-peer lending or crowdfunding, all those new innovative things. And banks will be out of the, and then the central banks will have nothing to regulate. And I'm glad that Christine Lagarde mentioned that inside the Bank of England about 3 months ago. She was in a press conference. She explicitly said that we have to change because the entities that central bank regulated in the past will be different from the entities that they have to regulate in the future. Or otherwise, central banks will have nothing to regulate. So focus on the millennial generation, look at what they want, let's get ready for them. Fintechs is part of it, but again, the world's changing and changing very fast. And if we don't catch up with it, either as a market players or regulators, it will be out of, I wouldn't say control, but out of our hands.
What about your employees? We heard earlier from State Bank of India that they have a number of branches now where there are very few humans actually to interact with their customers. Is that also the case in Egypt, and how are your staff taking that?
I can tell you, Egypt penetration rate for the banking sector is low. Okay, we have, I would say, 12, 13 million, it depends how you look at the numbers of bank accounts, and meanwhile you have 55 million voters, okay? And there is other services, informal banking service, but now with the number is growing at using something like Fowry and other platforms, I would say those are semi-formal services. Yet we have a long way to go, but not through bricks and stones, okay? There are people we cannot reach with bricks and stones in far remote areas in Egypt, but the mobile is there. The penetration rate is 100% on mobile in Egypt. More than 95% are registered SMSs, registered SIM cards, either through the opening of the USSD for the old style mobiles or smartphones. You still can open and download a mobile wallet. This is how we should go, because the millennial generation and the people in the remote areas, they want the technology and the mobile money. And there, they can get their full banking services as a virtual customers, and they can get their credit history. Talking about branches, I can tell you that the number of branches, the growth rate of number of branches that we have seen in the 90s and the 2000 era is now less as a growth rate than before. And it's all because there is a mobile banking, there is the internet banking, ATMs can do everything. We even now for handicapped people, we have several, there is not a single branch that doesn't have an ATM for people who are either blind or unable or whatever. For all the services are done by machine. So the number of branches or the growth in branch rate will slow down. Will slow down and will be replaced by the devices, either for people in very remote areas or my two sons, they hate to go to the bank. They are grown-ups, in their 30s, but they hate to go to the bank. And when they need something, they do it either through the internet or the ATM machine. And if you go and ask them when was the last time you went to the bank, they will tell you more than a year ago, but they do everything by the phone, internet, or the ATM. This is the future.
I mean, it's a paradox of the millennial generation, I think.
Absolutely, absolutely.
They have very fickle consumer tastes, but at the same time they complain about the lack of steady employment. Those two are actually connected, I think.
This is where fintechs come. This is where it comes and complement our. We're not going to go and keep buying applications, but collaboration will help to satisfy the demand of the millennial generation as well, not only financial inclusion.
Walid, could I talk to you about the amount of money that's now flowing into this sector? Is it excessive, insufficient? It feels like there's an awful lot of discussion, hype even. Is there too much money chasing too few good companies?
In venture capital in general, yes. In fintech, not really. Not really. But we have to say it that way, there are very few fintech plays coming out of this region that have proven to be successful. So we're still at seed or Series A, and you cannot say a company is successful before it reaches, sustainability or certain scale or certain growth rate in revenue, or at least cash flow positive if possible. And none of them have reached this stage. In terms of investment amounts, well, the good part is that there's more money today being invested in VC than PE. But within VC, I would say fintech is less than 20%, and there's 80% of everything else, every other vertical in the technology space. So we cannot say there's too much money chasing too few good deals, not yet.
Heather, would you agree with that? Or?
Well, I think one of the differences with fintech versus other tech startups is actually they need to raise a lot of capital to be successful, and that might be why we're not seeing many that are successful here, because in the region we still lack real depths of VC. There's just not enough capital to go around to fund these kinds of rounds. If you look at fintechs in the US, companies like ViewPost, which is an inventory finance platform that now has gotten into the banks like Citibank, Bank of America, he raised $100 million to be able to get there. So a lot of it is when you're regulated, when you're trying to work with the banks or partner with them, you actually need to raise a lot of capital versus, a tech startup that gets acquired by one of the larger multinationals.
And in trying to raise money from banks, if in fact you have to partner with them, does that require a very different approach from other kinds of venture capital raising? I mean, do you have to wear a tie, for example?
Not a tie, but you do need to know how to interact with them. And we actually just had the Hive demo day a couple days ago, and there was a very interesting talk about this where one of the VCs who's from New York, she describes basically, you've got to figure out how to work with the bank. So if you're a startup and you come in with a cloud-based platform, the bank immediately says, I'm not interested because all I think about is security of my data. So you've got to be aware, especially when you're enterprise-focused. It's a different game than being a consumer-focused startup or company. So there are different rules, different regulations, trying to navigate. I mean, I think that's why accelerators like the Hive are so important, where you can actually develop use cases with the banks and figure out how to try out things with their customers, which is one of the hardest things when you're starting a business.
Samir, what's your perspective on that? I mean, how should one comport oneself if one wants to raise money from what's actually quite a conservative sector still?
Sure. Before we go to that, I just comment what Hisham said around the Egyptian story. I think it's very interesting what you said around the banked population, which is a small portion of the entire, voting population. That's the same problem that India had, obviously, and probably for some similar reasons. We had remote areas where there was low density. Having a physical bank there didn't make sense. And the government regulations or the JAM program, the JAM Trinity, as we'd like to call it, allowed for, a mobile, your electronic ID, and zero balance accounts to be created. So you can start with a cent if you want. And then everybody becomes banked. And it changes everything from a banking standpoint. Back to the investment story, I'm not sure about the global numbers in FinTech, but probably they range between $12 to $15 billion that was spent, or about to be spent this year in the FinTech sector. Back to your question, is that too much? Is it ever too much? I don't know. I don't think so. But probably for the region, we have lots to do beyond the investment bit. Take the UAE, for example. 70% of the people who live here are not eligible for a bank account. So the regulations today, correct me if I'm wrong, you have to start with a minimum paycheck of maybe 1,000 dirhams to open an account, something like that. That puts 70% of the people who live here outside the scope of being banked. So what do you have to do? You have to create that FinTech environment. It's investing, it's talent. It's the same problems you have in digitization across the board. So lack of talent is going to kill you. Data scientists, mobile developers, UX, UI, unless you import global platforms. I mean, the intent, I think, is to have a local, production, right? But that requires a change of regulations and the visions from the government and creation of local talent that we haven't cracked yet. Not just for FinTech, for other digital plays as well.
It's an interesting question about the human capital required to make this work, as well as the venture capital that we've talked about. I suppose the answer for this region might be to encourage migration, encourage local training of talent. Can we train people quick enough in this region?
So, ironically, we spent the last 8 months developing a report with LinkedIn on the digital human capital gap in the region. It was published actually in the beginning of October. It's a long report. I don't think we have time for it now, but the gist of it is the following. Yes, you can import, obviously, to serve some spikes in demand, but fundamentally, it has to be a local, production of talent. It has to start with, since kindergarten, raising awareness on STEM, education, science. It's a difficult task. But vocational training plays a big part in that space as well, because the big problem with digital talent is that it's a moving target. You have to continue to learn how to learn. Who had a blockchain expert 10 years ago? 10 years from now, probably it's going to be something else. So it's now smart social media analytics and cloud and a few things like VR, AI and so forth. But this is a moving target of talent where the government has to create an education model that is not designed to create a human being that doesn't change, ever. You have to create people who can learn how to learn, sort of thing.
It perhaps comes back to Heather's point about tenacity. And presumably a lot of the founders you talked about were good at learning how to learn as they went along.
Yeah, and trying out new things. There's a company here that some of you might know, Now Money, that does remittances marketplace, so it helps low-income workers get better exchange rates to send money back home. One thing about the Gulf that's unique is that $100 billion gets remitted back annually, which is the second highest amount after the US. So there's a massive need for new technologies, new ways to do this, and startups like this are the way to maybe look at it and try things out.
We have a few minutes left. Does anyone have a question for our panelists from the audience? Please raise your hand if you do. There's a gentleman at the front, if we could bring a microphone to him. And there's another gentleman near the back. I've seen you, so we'll come to you next.
By the way, did you see the huge billboard on Sheikh Zayed Road? His Highness Sheikh Mohammed bin Rashid was saying it's written a million coder, right?
Yeah.
Did anyone see that?
A million coders.
There's an initiative to create a million coder out of the Arab world in the next few years.
Huh.
It's just amazing. Instead of just outsourcing, we'd like to do it ourselves. Instead, just outsource to India and Poland and Eastern Europe. Please, sorry, go ahead.
Go ahead.
Thank you. My name is Ashraf Gamal. I'm the CEO of Hawkama. It's a corporate governance institute at the DIFC. Now, I have a question regarding regulation, actually. I mean, what are the issues that regulators have to pay attention to when they think about the fintech industry? Because that's a discussion which is ongoing right now. Now, not to be like central banks, which will hinder that industry, but then what are the key elements that regulators have to pay attention to when they draft regulations for the fintech industry? Thank you.
Yeah. How best to design fintech regulation? Who would like to take that on?
I can take a shot and then let my colleagues take it.
Sure. Samir and then Hisham.
Hisham, you want to start?
Please, go ahead.
It's not the issue of regulation. It's you can have a multi-regulator in a country, like what we have, for example, in Egypt. But the most important thing is the regulator has to facilitate the collaboration model, not the competition model between banks or tying up banks. They cannot do this while fintechs is doing that, especially in fundraising, because what we have seen international, not in our region, that they started to compete with banks, especially in Europe, in terms of raising money through deposits and then lending. They are coming through in the middle between what banks can do because of the regulatory capital requirements, and they started to overpay in deposits because banks take deposits and they have nowhere to go with it because of the capital requirements. And meanwhile, they undercharge compared with banks because banks, they have the capital charges. So this is what the international regulator has to worry about. In our region, it's not the case yet, but it needs to be kept on mind that there is someone else will play the shadow banking role. And the minute you start to have the shadow banking role coming in, you have to worry about the depositors' money, because really central banks and the regulatory side, they care about the depositors' money and. It's not the borrowers, but really the depositors. So this is the critical part. And in Egypt, I think we are very aware of it. In fact, recently, after the establishment of the National Payment Council, which is something very interesting because it's headed by the president himself, they started to look at what's needed to facilitate payments, make payments, and how to integrate the unbanked people in the system, but without touching the part about the depositors' money. Even the model for mobile payment, mobile company, banks, service providers, everyone has a role. So the deposits are still with banks that are regulated by the central bank. And then again, on top of that, you have another layer where they establish the financial inclusion unit at the central bank, which is something new, which is very good. Now, listening, the most important thing is to listen to the market. And that's really critical. It's not like I regulate banks, I don't care what's happening anywhere else. No, listening to the market and listening to what is happening in the future and prepare yourself for it. And my fear about the fintechs, deposits and lending, they come in between the undercut banks, then you have underground shadow banking. This is my biggest fear.
This is a huge issue, surely. I mean, it was very clear in China, for example, that Yuebao, which is one of the most successful money market funds, raised huge amounts of money, was purely in the business of regulatory arbitrage. It was able to offer depositors better rates because the banks were regulated in a way it wasn't, with caps on their deposit rates. I mean, what are these dangers of regulatory arbitrage and undercutting traditional institutions that have to bear stronger regulation for very good reasons?
So I would, again, as usual, add something to what Hisham said back to his question. So in the context of regulatory reform, you've got something to play with the financial sector, to your point exactly. A bit of innovation element, allowing zero balance accounts, allowing accounts to be created based on ID only, and so forth. Plus, we've got another monster, which is around enabling the innovation sector, allowing startups that will lead investments to happen. You have to have a bankruptcy law. You You have to have regulations for importing talent. You have to have regulations for equity options and so forth within the startups. There's a whole set of regulations that applies to FinTech or otherwise in the digital space to enable the startup community that you're investing in, basically.
No, please.
I'm sorry. Compromising customer information is one of the critical things that banks look after. But with the fintechs, that need to be very well regulated because customer information and privacy is a critical part of the world money. And my fear as well is another part, not only the deposits and the lending, but what are the regulations so fintechs or finance companies don't compromise customer information.
There's a gentleman at the back who had a question. You've been very patient.
This question is for moderator and also the panel. One of you mentioned that 80% of the fintech startups are going to melt down in the future, and fintech industry is almost 5 to 10 years old. Depends on the region. For lack of a better word, fintech 2.0. What are the new business models you are looking at beyond lending or remittances or payments? Especially for you, starts with Mr. Cox, because you said you're seeing a lot of emerging models in Hong Kong and China. Thank you.
Well, we actually have very little time, so I'd much rather our panelists used what little time we have. What do you think, FinTech 2.0, Heather?
ICOs, so initial coin offerings, which could basically replace the need for IPOs, so public exchanges. I think that's a really hot area, and I'm bullish on it. Blockchain, Ethereum, digital currencies, maybe not Bitcoin, but digital currencies definitely. Smart contracts. So I think that's where things are going over the next 10 years or so.
So basically what's happening today in the US, we will see 5 years down the line in this part of the world.
But Waleed, it's happening here. There's actually an ICO VC fund, Spice, that is investing in this. And there are things like Bit Oasis, a regional clearinghouse for Bitcoin. So it's just very fragmented here. And part of it, hopefully now with some of the regulatory regime, the DIFC, is to bring some of those companies in-house and give them a chance to maybe have more access.
Well, I'm afraid we'll have to wrap up there because we've run out of time. But our next session is on a very similar theme, looking precisely at blockchain. So those of you who weren't able to ask your question now, please save it for that session. And also, let's give our panelists a round of applause. Thank you.
Thank you.
We should also have a round of applause for our mystery voice, actually, who I thought made some very pertinent points.
You hear me? For those of you who weren't here earlier, my name is Simon Long. I'm the Economist finance editor and the moderator for this last session, which, as Simon mentioned, is on the blockchain. Before we start that, however, we have our final couple of polling questions. You should by now know how it's done. Go to Attendees Hub if you haven't done it. That's Crowd Compare Attendees Hub. Download the app, search for Global Financial Forum, open the live polling page, and then you will find these two questions. Does your organization currently use or have plans to use blockchain products, yes or no? And a simple question, is the blockchain overhyped? To discuss these and related issues, I'm joined by a very distinguished panel. I will sit on this end, I think. Leanne Kemp, the CEO of FinTech. I want to make sure I get the description right. A digital global ledger that traces the provenance of high-value assets. Brian Behlendorf from the HyperLedger project. Hi, Brian. And Ashish Birla, Vice President Product of Ripple. Thank you all very much. Sometimes, thinking of blockchain, I'm reminded of driverless cars. It's a subject that I seem to read an awful lot about so much so that you hear this technology is imminent, it's going to change everything, it's going to change the way we all live, that sometimes I'm quite surprised when I go out on the streets to find that nothing has actually changed. Same with blockchain. For the past 2-3 years, this has been going to transform finance. Apart from Bitcoin, Ethereum, and the ICO world, in terms of most everyday life, it seems not to have had that much effect at all. I mean, Professor Lian, is that fair, and are we about to see blockchain technologies emerge into the real world?
Well, I think my company started in, the very original thought was in October of 2014, and then I incorporated FinTech in the heart of London in April 2015. And so since that time, we've been working on mine-to-market transparency, tracking diamonds from the source of the mine right the way through to the retail outlet. And we have about 2 million diamonds on the ledger. It's live, it's in production, and so it's not about, is it coming tomorrow? It's already here.
And Brian, I mean, you had a stellar career as a software developer, but you have devoted yourself to this as the new technology. Why are you so excited about it?
Yeah, so I was part of the group that wrote not the first web server, but perhaps the first one to grow into widespread use. This is the Apache web server, and started the Apache Software Foundation. And this is perhaps, to me at least, the most exciting technology since the internet, since the web really, because just like the internet, it changes the physics of a really important critical thing around information. I mean, what the web was to access to information, the way to reinvent that. If your business model was dependent upon being a gateway to information, you substantially had to rethink your business as the web grew. With this technology, if your business model is about being a gateway to transactions, to being a center point, to being a hub that tracks that limits access to it, that charges for it, you do need to rethink your business model. So what the web was to information, blockchain technology writ large is to transactions.
And could you explain the difference between permissionless and permissioned blockchains? Because I think this is quite important to clarify where we are.
Sure. So people sometimes use the definite article, the word "the," when they say blockchain. And in some ways, that's a misnomer because to some degrees, like the internet, blockchain technology is actually about building lots of different networks, right? Networks that are about information sharing and transaction sharing networks between categories of businesses, of sectors. And some of these will be rather large, the size of every potential consumer out there. Others of them will be fairly tiny. There'll be a network of 10 banks that want to do a settlement network between them, a set of central banks, for example, or healthcare companies, that sort of thing. And so in this world of a patchwork of different ledgers, they will use different technologies to achieve different characteristics. And the side of that spectrum that has attracted most of the attention have been the big public, what are called permissionless networks, the Bitcoin, Ethereum types of world, where anybody can join that network and write a transaction to that ledger. And there's some really interesting, compelling things you can do with that, obviously. But it comes at some cost. Transaction fees can be high. Right now, I think on the Bitcoin network, fees are at $20 per transaction, right? Rates are limited. I think a total globally of the Bitcoin network is 7 transactions a second. Whereas with other types of ledgers, especially what are called permission ledgers, where you say, here's the members of my network, I know who they are, they're part of a consortium, they might even be bound to some common legal agreement about how to treat data. With those, you can use different technologies, different consensus mechanisms, as they're called, to achieve higher transaction rates, to cut fees down to zero. And so there's kind of a spectrum between these two.
And you need less computing power.
Much less computing power. I'm sure you've heard of proof of work, which is essentially as a way to keep the public ledgers fair, you burning CPU power to run a lottery to decide who wins and gets to put the next link in a chain. And it's wasteful, but it's the first proxy to say, well, this is how we avoid people spamming the system, basically. On a permission ledger where parties are known, where they can get kicked out for bad behavior, that's much less of an issue.
Actually, bearing out Lian's point that this technology is already out there in the real world, your website lists over 100 customers that Ripple has, including some of the world's biggest banks, including some here today, Standard Chartered, State Bank of India. What exactly are you selling them, and why are they buying it?
Yeah, so with Ripple, we've been in this space since 2012, and I think what Heather said on the last panel was really true. We focused on cross-border payments. We felt like that was the main use case for blockchain to get started. Right now, we are in the infrastructure building phase. We've elected to partner with banks and build specific products for solving their problems in cross-border payments. And so, we build products for banks. We've been hard. It's a hard segment to win over, but we've been successful in that. And the fact that we're live in production, Ripple doesn't do proof of concepts anymore. It does not do pilots anymore. If you're serious about joining a blockchain solution, you come to Ripple, and that sort of set us apart and has helped us get adoption with over 100 financial institutions globally.
Thank you. Leanne, can we come back to diamonds? And what were are the problems in the diamond industry and how can blockchain help solve them?
So we like to call them challenges rather than problems.
Issues.
Certainly, the industry has boasted 500 years in trade, and at the very core of that industry, we still rely upon a gentleman's handshake and a chit of paper and a promise to pay. But what we've seen, particularly in the last number of years, is the rise of synthetic stones. And there's nothing wrong with the manufacturing of synthetic diamonds. In fact, they've been around for quite some time. They were introduced by GE. But the issue is that they're now becoming gem quality standards and they're undisclosed. And it's really only been in the last number of years that we have enough machine and science to enable us to be able to detect those. So one of the challenges has been the inability to detect synthetics and the fact that they're undisclosed and they're peppering the supply chain. We have also had a heightened set of nervousness within industry with the major banks within industry. One, of course, Standard Chartered. I think they held a relatively large portfolio of supply chain finance, elected to pull back from industry. And it was already well reported that there was a $3 billion shortfall in financing the middle part of the pipeline. And, of course, with a $2 billion portfolio, that's caused quite a lot of nervousness. And the third is really the baseline of trade of diamonds is really caused by certification, both within the rough section of the market with the Kimberley process and then within polished. But yet we've never seen an evolution of that certification move into a digital realm. So we have, effectively, it's the currency of industry, but yet we have no technology sitting within our central bank, and we have seen issues in terms of orphan certificates being matched to synthetic stones. We've seen double spending of the one certificate. We've seen double financing of the pipeline. So these challenges...
Are you talking mistakes or fraud?
No fraud. Full stop. And in fact, that is well documented and being well pursued by governments and by industry at large. So massive sets of collaboration is underway to ensure that the integrity of our industry is preserved for generations to come. And Dubai sits as the third largest trading hub in the world, and by no means have they ignored anything to do with bad behaviour in the country and within industry.
And how much of the industry have you now captured, if you like, in your system, and how does it solve those problems?
So I'm feeling relatively tired, so I've captured quite a lot. Certainly, we were probably one of the first companies in the world to recognise a non-financial use case of the technology. So that was relatively early on. But if it wasn't for the fact that we had sort of a collision or a number of challenges and the industry has very real problems to solve that can't be solved anymore by that gentleman's handshake and a chit of paper and a promise to pay, then we wouldn't be in the position that we are today, in that there are very real problems, and that the ways upon which participants in the network are conducting themselves just can't solve those problems. So really one major certificate house that represents about 80% of the world's market certifies about 15 million diamonds in a year, which are anything from 25 pointers and above, so something that you wouldn't be embarrassed to say I do to. And we have 2 million diamonds, and that was captured really within the first 2 years of trade. We're only 2.5 years old. We'll see a massive ramp up of volume now because of where we're sitting in terms of the disciplinary controls within industry.
Ashish, coming back to your business, as I understood your description of it, you don't have a kind of off-the-shelf product that you're selling to your clients. You work with them to develop a particular solution. Right? So how does that solution fit with the others you're delivering in other banks?
Yeah, so we actually have a off-the-shelf solution. It's made for banks. We realized early on that you need to develop specialized solutions for banks. For example, a cloud offering doesn't work. So we developed and brought to market a product called XCurrent. And that's a product we sell to banks. It sits inside of a bank's infrastructure for security reasons. But we've been working on that product for 3 years. We've introduced 2 additional products over the last year, one for corporates that want a modern-day experience for moving money, and then another product for innovative financial institutions that want to use digital assets. Our digital asset is XRP. If you want to use digital assets to move money globally, you could use that product that we introduced just a few months ago.
Right. And Brian, it's blockchain's not the blockchain, right? I mean, the future is many blockchains.
Yeah, so kind of winding back, I mean, it was learning about use cases like FinTech's, or I think actually the one that pulled me into this space was land titles in emerging markets, right? And it was as a use case that illustrated how you have a transaction system where you really need to avoid depending upon a central organization to be the final arbiter of truth. You really needed to find some way to use IT, to use technology systems to allow the participants in that ecosystem to trust the results of the technology, to trust the database without a network like that having to go the way of Gmail or Facebook or eBay, right? And then I sat back and asked myself, do I need a cryptocurrency to get there? Do I need the CPU burn of proof of work to get there? And that's when I learned about this project the Linux Foundation had launched called HyperLedger, which at first kind of looked a little bit like the old school kids trying to be cool again, right? But really was an attempt to try to say, okay, when you have these different kinds of networks, is there a way to provision technology that hits higher transaction rates, that saves a bunch of energy, but more importantly, makes it so that the technologists and the builders and the vendors in this space can build common technologies, common solutions across all of those. The Linux Foundation, which is actually the home for HyperLedger, that's my employer, has a history of facilitating infrastructure technology projects, such as the Linux operating system, but also cloud computing, software-defined networking kinds of tools. So HyperLedger in this case is a community of technologists, of geeks, of companies in this space, building this common infrastructure, these common tools, to be able to enable this world of different ledgers out there, including, by the way, technology that Ripple helped develop called the Interledger protocol, which is a way of building bridges across these ledgers, so that if you were to buy, say, a house whose title is tracked on a land title chain with XRP, which is the currency used in the Ripple system, you want to conduct a transaction across both ledgers at the same time. This is technology to make that possible. So the good news is the technologists are working on it, that the building blocks are all open source software. They're all multi-vendor, multi-stakeholder technologies, very much like the internet, and that's what we're helping support.
And I think that the interoperability aspect is really key, especially in the MENA region. For example, in India, in the next 5 years, 1 billion new people will come online to get banked. And they're not going to be at your traditional bank. They're going to be at mobile wallets and telcos. And having interoperability amongst all those different systems, so not just blockchains, but other mobile networks, other payment networks, is really important. And that's part of our vision is, how do we connect them all? How do we work with HyperLedger to connect them all? But how do we connect them all in one experience? And so if I want to send money anywhere in the world, I only have to connect in once. And that's been a large part of our interoperability vision.
In the long run, do you see this technology as completely revolutionary? Will it overturn the global payment system?
I think it's already overturning the global payment system, and not in a disruptive way. I think that the way that Ripple's working is we think that banks will continue to be a very big part of the global payment ecosystem. So yes, a lot of the legacy technologies, I think I'm happy that they're going to sort of go away, but I think they'll be modernized using blockchain technology, using interoperability standards, and I think that everyone's going to benefit from that. So we're really happy with our decision to work with banks, and And also Ripple's now starting to work with central banks as well to look at how they can use blockchain to connect different central banks together. 2 weeks ago, Ripple hosted a central bank forum in New York City, and I was really impressed that a lot of the central banks that attended were pushing the envelope in terms of using new technology to move money. And maybe 3 years ago I wouldn't have guessed that, but that has been a pleasant surprise. And so we believe in partnering to develop the next gen infrastructure with central banks, regulators, and banks like yourselves.
You preempt me. I was going to come on to the attitude of central banks and regulators. I mean, you see them as positively encouraging to the technology, but what about controlling the use of it? How much do they want to get involved in that?
Well, I think that the important thing is that there's no skirting regulation. And so you can take two different approaches, I think, in the Bitcoin or the blockchain space. One is circumvent regulation. The other is partnering with regulation and actually making it safer. So we took the stance early on with our products to make it actually safer to use our products. How do you make sure that your products comply with local regulations? And we did that by working with local governments in India, in the US, to understand their concerns with using innovative technology. And before we even go into a country and sell to any financial institutions in that country, we talk with the regulators first and we explain how this is going to be beneficial to them. So I think that partnership aspect makes a pretty big difference in getting adoption. It's definitely a zebra approach to the last panelist. I mean, it takes a long time. But if you're in this space, you're in it for 20 years. It's gonna take a long time to see the full vision. But I definitely think that there's no shortcuts in terms of global payments.
So, nevertheless, Brian, I mean, some regulators clearly already are concerned about some blockchain applications in terms of the huge expansion, the huge growth in Bitcoin's value, of the ICOs, the enormous amounts of money being speculated there. Are you sensing that they want to get more involved?
So, if we were to compare this again to the early days of the internet, right? I remember the kerfluffle that appeared when the Hacker Manifesto appeared, or the Hacker's Guidebook, or I forget what it was, that detailed instructions about how to build bombs and things like that, right? Appeared on the internet. And or when copyright violations appeared to be rampant on the internet, and this was a reason perhaps to question the value of the internet. Well, it turned out we developed systems to be able to address those, right? And they're imperfect, right? If anything, abuse on the internet is not a solved problem, but it's a manageable problem. It's something that we've learned how to balance the benefit we get and manage the risks of that. And likewise, in blockchain technology, there are great ways to do capital formation. There are great ways to do all sorts of applications, and there are ways in which people with lower ethics and morals will use these technologies to more easily separate people from their money, right? And that is why this is not the destruction of the need for regulation or the destruction of the need for governance. If anything, this is a call to arms for regulators, and it does give us an opportunity, though, to take regulating activities that we used to have to depend upon auditors for or regulators or inspectors for, and turn them into things that can be algorithmic, right? Turn them into, for example, on a land title chain, if we keep track of who hands title to a piece of property off from one party to the next, and we say, if you can't prove that you have that title in that chain, I'm not going to buy that property from you. Well, in many ways, we've almost eliminated the land title risk. And hopefully insurance, title insurance, comes way down. I mean, there's a lot of advantages that can come from automating these processes, just as we found, as FinTech has found, right? These are ways to improve the auditability and accountability of many of the core business systems the world is built on top of. And in doing that, cut fees, cut costs, and hopefully make us more agile.
Indeed, Leanne, I was going to ask you, I mean, it sounds from your description as if you're solving a problem of a largely unregulated market. And so the authority should welcome you, is that right?
Yeah, we are. We're a self-regulated market and we want to stay that way, but we interface with regulated markets. We interface with financial services, banks and insurers, and this is the interesting sort of dichotomy that's formed. How do we bring enough transparency to opaque marketplaces? But being transparent doesn't mean that you're bearing nakedness of your entire financial transactions to the world. It's about actually having privacy-preserving mechanisms in place to enable that that information to be shared under digital rights, under a management regime of those digital rights. Now, that's not necessarily a genius innovation by the three of us here on the panel. That's inherently the combination of a number of pieces of technologies coming together at the right time, with cryptography and distributed data. And of course, this consensus mechanism gives us the ability to be able to sort of drive those changes that are so very well needed.
We've heard cryptocurrencies, obviously land titles, diamonds. This morning we talked to Josh Crum of Gold Money about gold. What other verticals do you see as sort of ripe for blockchain applications?
So, I mean, I can talk to our world. So we have a very large purpose and consciousness about what we are doing. We really care about what is happening with Mother Earth's assets, the global commons, these things that are not necessarily going to be here in another 2, 3, or 4 generations from today. So we see the application in the first front to enable transparency for supply chains. Now, whether that be lithium, whether that be cobalt, mica, diamonds, coloured gemstones, gold, all of these things are very important. And on the other side, we also see that this technology can be applied to rising asset classes. So one of the sort of future potentials of the diamond industry is a futures market. We don't have ETFs yet, and we don't have that in this space, but it's very clear that the enablement of this technology could give birth to that as an entirely new separate vehicle class of investment.
Thank you very much. I would like to throw it open to the floor now, because I know there were questions left over from earlier. I think there's a question in the front row. And could I remind you also to answer the polling questions if you haven't already done so. I don't know if you have a chance to change your mind, if you've answered once and have changed your mind thanks to the discussion, but I hope some of you will do it here.
Libna Qasim, fascinating session, so much to share. Yes, technology, which we have no control over, is accelerating at a pace which we never probably anticipated many years ago. Yes, it's got great benefits. We've spoken about central banks still catching up with technology, leave alone regulations. My question really for the panel is your insights and thoughts about how can confidence and assurance be extended to the end users? With the banks, strong, stringent infrastructures are put in place. So how cyber secure is FinTech, is blockchain? And so we know it might be another decade before central banks and the regulations catch up with the technology. But really your thoughts and views about how can we secure data? How can we secure, and how could you prevent cyber security and threats? Thank you.
Perhaps as a sidebar to that, I might add that I'm struck by the number of people I've met recently who bought Bitcoin a few years ago, have lost the key, and now have no access to what might be a fortune. but the serious question.
We are still vulnerable to the kind of pedestrian cybersecurity threats that exist without blockchain technology, right? The endpoint hacks, the end user user experience kind of failings that do lead to people losing their keys or their wallets being hacked and millions of dollars being lost that way. Where this actually presents a picture of actually progress is around when you hear about the Equifax hack, for example, right, where millions of people had their data stolen, right? What we haven't yet heard about is people's credit histories being changed by a hacker or healthcare records being changed by a hacker, right? That's coming, right? That's the next layer of attack, especially when you think about nation-state attacks upon each other. Former President Tomas Henrik Ives of Estonia was one of the first leaders to recognize that as his nation got more digital, they had to really think long-term about this. And so he moved his country's healthcare record system to kind of a private blockchain setting, not because he wanted to make records more portable, because he wanted people to pay for their health with Bitcoin, but because he was worried about the data integrity problem, because he wanted to make sure that, his example is people's blood type. right? He wanted to make sure as his 1.2 million citizens had their blood type entered into the government database, right, healthcare database, and would show up for treatment, that wasn't a record that could be hacked by an intruder trying to change that for everybody. That was a real scenario for them. And so a blockchain approach to recording these kinds of things and the assets that are tracked and the data that's tracked, because of the nature that this is a replicated database, everyone has a copy. I can't hack everybody's copy and make a change, right, to an old entry. This is a built-in guarantee, and that's where it gives me a lot of hope that this is a way to build trustworthy information systems in a world where we can't control the endpoints and we seem to not be able to keep our software up to date.
Yeah, just to further that, I mean, if you look at a lot of the financial hacks today, a large part of them were due to one central authority that was vulnerable to a single attack. And what's great about these future innovations and the ones that we're working on today is it's highly distributed. And so it's really difficult to hack each individual distributed system. And that decentralized nature makes it more powerful. I think that the challenge that we have is that it's a user experience problem today. So, how hard is it to hold your secret key on the blockchain where there's no reset of password anymore? So if you lose that, you're done. Like there's no one there that's going to help you get that money back.
Oh, yeah, there's people working on it, but not yet.
There's people working on it, but today that's a big problem.
No call center.
No call center. And if you look at the hacks that have happened today in the blockchain space or the Bitcoin space, they've largely been centralized exchanges that have been hacked. So how do you Mt. Gox and so forth? So how do you think about that in a more decentralized fashion? So that's the next wave to come, is work on user experience, work on more decentralization to reduce the surface area for attacks.
I mean, I think that there's huge advancements in the space of cryptography and around the underlying primitives that we're using in terms of just cybersecurity in its own form. And we have seen a lot of efforts in terms of that really accelerating over the last 4 to 5 years. And on the backdrop of that, we've also seen a lot of compute power coming in with the likes of supercomputers, enabling us to be able to transact a lot quicker in terms of security. So I take comfort in that moving forward. And when we use the example of data being stolen, our industry actually had a root level access breach that changed the colour and the clarity of the stones, not the sizes. Now, to think about what that true impact is, rather than it being just, and it is a central authority, but 70% of the diamonds that are traded across the world that are on public retail websites are actually consignment stock. So the company that's selling those stones don't actually own it or even hold it in some instances. Now, when you think about the impact that had, that one record or the 25 records that were changed, that prolificated across the globe with no way of anybody being able to know where and who had what diamonds listed on what website, being sold by who at what point in time. And not only that, there was no way to recall any of those consumers that effectively purchased those diamonds. So the triple-on effect of that was catastrophic, but enabled change. So I think this technology has a true promise and will become the next sort of level of wiring of the internet in terms of distributed trust. But in terms of industry, there has to be a problem to be solved, and the problem has to have some sense of urgency now to enable it to go through the process.
Thanks, Dan. There's a question first in the back row.
Hi, I'm Sunil. I work with BChain Partners. We're a blockchain management consultancy firm. What we see as a trend is we see that governments are polarized. On one side, there's government of China and Korea who've actually banned blockchain and ICOs, etc. And the other side, there's Switzerland, which actually is issuing passports on blockchain. And we see other governments right in the middle, looking at what the SEC does and how the SEC actually outlines the next regulatory regime. The question to the panel is, what are your views and what are the implications of such changing trends implicated by the government?
China's banned Bitcoin exchanges, hasn't it? But I mean, it's not banned Bitcoin mining, for example. I think it's only.
So I think I might sort of pick up that. That's the perfect example of bucketing everything into one sort of conglomerate sentence. It's fact that China has not banned blockchain. However, it has considered how it is going to, for a temporal point of view, begin to consider what is happening with ICOs. And it's likely that that ban is being lifted, or has been lifted, I think, more recently, or is being lifted. So I think it's very sensible to be able to separate the layers of the technology and the purpose of the technology, which is often the responsibility of media that they don't necessarily take too heavily on their own two shoulders to enable that message to be seen and understood.
Sorry.
No, but it's true. And it's the responsibility of those that are custodians of the technology, the early adopters and the early sort of innovators, to ensure that message is actually correctly thread pulled through industry.
Thank you.
Yeah, so we also have a job as industry leaders to educate local regulators, and in some cases they overreact. But in the case of the United States and in the case of Korea, I think with the ICO market, you can't skirt regulation. You can't do an ICO when you're really raising equity. And so I think some of the stuff I feel is positive for the entire industry. Let's get ahead of it, and I think that the SEC has done a great job there. But also it's on us as early innovators to go out there and make sure that they understand the true benefits and partnering with the regulators in China and Korea as well.
And it's just vitally important to remember, blockchain and Bitcoin are not synonymous. Cryptocurrencies are one application of blockchain technology, and ICOs are one application of cryptocurrencies, right? Like these are subsets of increasingly larger sets. And not only is China enthusiastic broadly about blockchain technology, I've been impressed, I'm sure many of you have been, by Dubai's commitment to blockchain technology. It's sincere, it's deep, it's meaningful. I've spent a lot of time learning about it, and I'm enthusiastic to help see that roll out.
Yeah, and I think that, largely social change and technology change is by far leading well ahead of governments and regulators. And so what we're seeing is that the technology and even social change is beginning to inform governments and regulators what the potential power of this technology could see. Now, we've seen that already in regulation change with GDPR in terms of the holding of the privacy of data within state. And yet with the new forms of technology that's coming out and layers like homomorphic encryption, which is largely white paper sort of driven at the moment, could fundamentally change the way governments see the Privacy Act and the privacy and the control mechanisms around who has access to what data and who controls what data in terms of utilisation. So it's very early days in that space, most definitely, but the technology is largely informing changes to government and changes to law.
Thank you very much. We've got one more question, and we also have to take in our poll results.
Hi, my name is Ramil Muzaffar. I am a co-founder of Malia, one of the babies of DIFC FinTech Hive. One of the challenges we faced during developing our startup was actually difficulties of national payment systems in accepting FinTech startups' use of payment systems for financial transactions. And I'm wondering that, I know that blockchains, one of the major areas of application is payments, both global and international. And I just wanted to ask you how hopeful or optimistic you are in terms of blockchain taking over payment, both local and international payment systems. Like, I heard very positive things about Ripple replacing SWIFT very soon. I'm just wondering what is happening in that sphere. Thank you.
Question I was going to ask myself, yes.
Excellent question. Yeah, so we've seen a lot of movement both on the local domestic level. And so I think there's a lot of innovation happening, and you'll see more and more blockchain in terms of domestic level. So MPCI in India, I think what they've done in India for ground level domestic transfers is incredible. I think you'll see more and more of the MENA region move to something like that or move ahead of that. But definitely I think that we've seen a lot of demand for our solution for cross-border payments. I think we've seen corporates come to us saying that there's no real way to move money today in the way that they want globally. So a lot of these corporations that you've heard of have built their own payment systems. For example, Amazon has gone out and just completely bypassed traditional legacy systems and built their own payment infrastructure. We don't think that should be the case going forward. We want them to come to interoperability standards, partner with folks like us to deliver a better experience for sending money globally.
Just we're out of time. Just brief closing remarks. If you like,
Quickly, yeah. And even Swift themselves aren't standing still. I mean, they are reinventing major parts of their network as a as a blockchain-based network. And for them, it's about moving from T+3 days to T+5 minutes. It's about cutting the fees. I mean, I think we are going to see a race to the bottom when it comes to fees and the basics of transmitting money across borders. And that's good for all of us.
Yeah,
payments aren't my thing.
Good. Well, before I let you all go, let's have the results of our poll, if I may. Is there anybody who can put up the results of the polling? Yeah. So, oh dear. Oh, there are. This is the first question. Does your organization currently use or have plans to use blockchain products? 53% say yes, more than just over half. And as to the second question of is blockchain overhyped? 41% say yes, 59% say no. I think the panel won the day.
Despite having the word hype in the name of my project, I do subscribe fully to the notion that technology revolutions tend to be overvalued in the short term and undervalued in the long term. So I think we will actually, this is a slower ramp up, but it'll be substantial and it's there. And even if you don't think you'll be using a blockchain in your business, underneath the covers somewhere it's likely. Agree.
Indeed. Thank you all very much. Ashish, thank you. Thanks so much.
Thank you. Thanks.
Marks, and to try and sum up a very active day. Is this microphone working? No, I'll use this one. I promise I won't keep you long. I know it's been a long day, but I'd just like to come back to the three themes we said we would try to tackle today, and to, if I may, sort of briefly summarize some of the answers I've heard. Firstly, I'd like to congratulate us all on keeping out of this room what has been referred to throughout the day occasionally as the noise. There is a lot of noise out there. In this region, you have turmoil in Syria, Iraq, Yemen. You have the regional rivalry between Saudi Arabia and Iran and spreading ever darker clouds. You have the questions thrown up by the reform process in Saudi Arabia going west and north. You have great uncertainty within Europe as France and Germany try and revive a Franco-German motor for the European project. And let's not talk about Brexit, as I said. And most noisy of all, of course, is the US presidency of the past year, which has perhaps not been quite as disruptive as it threatened to be at the outset, but has, as we heard in, I thought, a very illuminating panel before lunch on regional trade agreements, has come close to threatening the foundations of the post-war order, including the trade with its threat on liberal trade order. So where does that leave us on our three issues? Surprisingly optimistic, it seemed to me, that on the Gulf, there was, I think, a consensus that it's a growing global financial power, both in terms of its external investment power and as a attracting for internal investment. There was some concern about how much capacity it has, how much the public sector is crowding out private sector growth, but by and large, there was considerable optimism. Particularly impressed, people were impressed with how dramatically Dubai has recovered after the crisis. And I was struck also by the many comments, favorable comments on the reform process in Egypt. Turning to emerging markets more generally, or as I must now call them, global growth markets, for those of you who were at that session, again, there's a picture of general optimism that both in terms of demography and economic catch-up, these economies will continue to grow fast. That includes considerable optimism still about China and confidence that it will avoid the hard landing that some fear. And particular optimism about China's role as, in a way, a substitute for the US in leading a new world order, or part of a new world order, through the Belt and Road project, which received a lot of very favorable comment throughout the day, although it is as yet largely on the drawing board. That we heard that it involves 15 Marshall Plans, or the equivalent of 15 Marshall Plans if it comes off. Again, within emerging markets, we heard the age-old concerns about governance and transparency, but generally optimism, particularly about, as our poll showed, Asia and Africa. Turning to the future of finance, well, I think that this session has shown that the future of finance, many people agree, is technology, it's FinTech. I asked at the beginning whether this was going to be, how disruptive this was going to be. It clearly is going to be enormously disruptive, though perhaps not as much to the structure of the industry as was at one time feared, that change is taking place in banks, not so much by replacing banks with new startups. Though the exception to that was a fear voiced that the big tech companies, the Googles, the Facebooks, the Amazons, with their masses of data might one day become a real threat to the banks. The other thing that struck me throughout the day was the emphasis on ethical finance that was raised both in the context of Islamic finance, which was expected to weather its recent setbacks and grow strongly, but more generally that as millennials become cash rich, have money to spend, money to invest, they are going to be demanding more responsible investment, more sustainable investment vehicles. And what in particular they are going to want to see a finance system that is more inclusive, in which the unbanked and the excluded from financial systems are included. And the third question on the future of finance is, I think, to come back to global growth markets. And that in terms of FinTech as well, we see China in particular, but also to some extent India, leading the way. They're being ahead in many ways in the adoption of the new technologies. Again, optimistic take there. And as for where the future of finance is, well, as Willie Sutton said about, or allegedly said about why he robbed banks, because that's where the money is. Where's the future for banks in emerging markets? Because it's where the growth is. On that note, I think I can draw today's proceedings to a close. Thank the DIFC very much for hosting us. Thank you most of all for sitting it out through a long day and through illuminating it with some very interesting and pertinent questions. And invite you to a reception, which I think will be held outside where we had lunch. Thank you all very much.